Okay, you are welcome. We are going to be talking about component of smart money concept. But in number 7 right now. In number 7, we're talking about change of character. Change of character is how you know the market direction, if the market is moving upward, downward, uptrend, downtrend, or the market is in a range. With change of character, as it relates to smart money concept, you can be able to know that. Now here, I'm showing using line drawings, all these line drawings to explain and for you to identify when price through market structure has changed direction, either from uptrend to downtrend or from downtrend to uptrend, and if it is in a range. Now, how do you identify change of character? You need to first of all note this. Number 1, mark up the correct market structure, the current trend, and note the point with valid break of structure that has candlestick closure. We have studied about break of structure in our number 6 of the component of smart money concept. Now we are going to be looking at number 2 now. Check higher time frame supply and demand. There are 2 ways to identify a valid change of character. First thing first, you need to mark the correct market structure. After marking that, then you need to also check for your higher time frame supply and demand area or zones. Okay, now there are 2 things you also need to note. That change of character, when it occurs, is when price tap into higher time frame supply or demand zone and retrace to take out previous low or high depending on the market structure. Okay, I'm going to be looking at the graphics, but what I try to mean in this place is, if this is a supply zone and market in the lower time frame is making, market is buying in the lower time frame, taking that inducement, make the structure, then tap into the higher time frame supply zone, what do we expect? This is supposed to be our inducement, that point, mark as high, and then here will be our low, right? As our, maybe there's other block here because price already taking out inducement, break of structure, then price make this type of movement, tap into our higher time frame supply zone. Many people will be looking here to say, okay, once price tap into this point, it will not be our inducement so that they will continue to buy. But no, most time the market, once it taps into the higher time frame supply zone as S supply zone, this point that is supposed to be our inducement automatically will change to a change of character. Then we'll be looking for entry, to make an entry here to continue to sell the market downward, just because of the power of the higher time frame. When we get to all those places, you understand it better more. Then that's one way the market can change. The other way is when you have marked out the correct market structure and price reverse. When price reverses, take out inducement, right? Break of structure, inducement, then price supposed to take out inducement and continue moving upward, and this is the low that has been confirmed. But instead of that, price comes to this low, give a little reaction and take it out by closing below it. What happens then? Meaning this market has changed direction from uptrend to downtrend. You will see all those graphics there. That's what I'm trying to say here when it comes to the 2 ways to identify market structure. Okay, the first one here, as you can see, price was making upward movement, bullish. This is a bullish market. Why? Because market went up, make retracement, went up again, second retracement, took out inducement, then make a break of structure. That's when price closed above it, right? Then price make this type of movement again, went up, came to take out inducement. We will look anticipating to make a buy here if we see our entry model. Then if we don't see our entry model, there is also another block. We want to buy here, but price came to this place, make a little reaction like you want to buy, then it took out all the money that is put at the bottom of this other block. Then what happened is there's a candle closure. With this candle closure, meaning that this is a change of character. Price has changed from bullish trend that is moving upward like this, then price has not changed to bearish trend. So what are we anticipating? We're anticipating price to come and take out this inducement, probably give us our entry and continue to sell. Or if no entry there, price can come and take out this inducement, give a little reaction, then probably there's another block here, price can tap into this other block and continue to sell downward. Or price can also, instead of that, price can also come, take out inducement, make a little reaction, come to this other this extreme here, sweep this extreme. When it sweeps it, give a single candle order block, and then we'll continue to sell downward. Or the other scenario, price can also just take out inducement, continue to make movement, and then continue to go upward. Everything is all about probability, but we are trying to look for the ones that have the higher probability. That is why this concept is in play. Okay, that is for when market turns from bullish to bearish. Now we are looking at where market turns from bearish to bullish. These are market structure, inducement taken, market closed downward, meaning that this is a bearish market, inducement formed. We are looking for price to take out this inducement, so I'll continue to sell, but nothing happened as such. What happened next was price took out the inducement, give a little reaction when it taps into probably another block here, taps into it, give a little reaction, and then price went up and closed above it. By so doing, that is when price has not changed from bearish to bullish. That is what we call bearish to bullish change of character. This point will now be our inducement. We anticipate price to come to this inducement, take it out. If you give us a reaction here that we want to enter, we can enter it and continue to buy. This now become our break of structure. Or price can also come to this down after taking that inducement. Price can come to this extreme here. If there's an order block here, then price can continue to move upward. Or the last scenario, price can take out this inducement, come to this place, sweep it, make a buy movement, or it can also close below this place to make another change of character. Different change of character can happen after a break of structure. Okay, we just have to know this concept and understand it. Then the last point we'll be talking about is when price is making this type of movement. What is happening here? This is higher time frame. Higher time frame. We are looking at higher time frame like daily time frame structure. This is the daily time frame structure that is happening on the left hand here. Okay, this is the left hand side. Now, what is happening on the daily time frame structure? Market make this type of movement, take out inducement, break of structure, give another inducement. What happened is we want price to come down, take out this inducement. Then there's a valid order block. We want price to tap on this other block and then make a buy movement upward. Okay, but when you now go to the corresponding lower time frame, because when I trade, I prefer to use the daily time frame and then the 1 hour time frame for my entry, or as the lower time frame, okay, for my daily time frame. So the 1 hour time frame, when you go to the one hour time frame structure, we will see something like this. I circled here. You will see market making structure there. Inducement. Market gave inducement. Market gave this type of structure. Inducement taken, break of structure, another inducement here, and then price now tapped into this higher time frame. This is the daily order block. When price tap into it, the first high point that will be taken out, as I explained in that paragraph there, the first high point that will be taken out will now be our change of character. Then to enter this trade, we'll look for inducement. Then price tap into this after the price took out the inducement, there's probably another block here. Maybe if there is, then we'll continue to buy this market in the lower time frame that is corresponding to the higher time frame. In this scenario now, we are using daily time frame with 1 hour time frame. So it is when price now tapped into the daily time frames order block or demand zone, then we'll look for a structure. If we see a structural change as explained in this place, you can take a picture of it. If we see a structural change as this, then we can make our buy move. We can make our entry move as explained here. This also applies to bearish market. You see, I just have to change the chart upside down. You can also see it. The same thing applies to when you want to make bearish movement. That's in the lower time frame. In this time around, everything now correspond to the higher time frame, because the higher time frame is bullish, but in the lower time frame, the higher time frame is bullish, right? The lower time frame now is bearish. Why is it bearish? It wants to tap into the higher time frame demand zone, make this type of structure, and make upward movement to continue making the corresponding move of the higher time frame. I hope it is very simple. You have to go over this again and again, watch it, understand it, then practice it on Richard. I wish us the best of luck. Thank you.